Question 1. Understanding policy provisions. Which of the following provisions in a long-term care insurance policy allows the policyholder to receive a portion of their premium back if they do not use any benefits? A. Non-forfeiture option. B. Return of premium rider. C. Elimination period. D. Inflation protection. Answer: B. Return of premium rider. Explanation: a return of premium rider allows policyholders to receive a refund of some or all of their premiums if they do not use any benefits during the policy term. This rider is particularly appealing to consumers who may be concerned about paying for coverage they might not need. It provides a financial incentive for individuals to purchase long-term care insurance (LTCI) by mitigating the perceived risk of loss associated with premium payments. On the other hand, a non-forfeiture option allows the policyholder to retain some benefits if they stop paying premiums, but it does not guarantee a return of premiums. The elimination period refers to the duration before benefits kick in after a claim is made, and inflation protection ensures that benefits keep pace with inflation, enhancing future payouts, but does not involve any return of premium. Question 2. Claims process and documentation. What key document is typically required for the claims process in long-term care insurance which verifies the need for care? A. Statement of health. B. Proof of income. C. Physician's certification. D. Application for benefits. Answer: C. Physician's certification. Explanation: a physician's certification is a critical document in the claims process for long-term care insurance as it verifies that the insured individual requires the level of care covered by the policy. This certification typically includes details about the individual's medical condition and the type of care needed, serving as a foundational requirement for initiating benefits. In contrast, a statement of health is often part of the underwriting process during application but is not usually required once a claim is filed. Proof of income is generally not needed for claims processing, as LTCI focuses on medical necessity rather than financial status. The application for benefits is the initial step in the claims process but does not provide the necessary medical verification required to substantiate the claim. Question 3. Scenario-based question. Mr. Thompson is a 62-year-old retired veteran considering purchasing long-term care insurance. He has been diagnosed with early-stage diabetes, which he manages through medication and lifestyle changes. Mr. Thompson is concerned about how his diabetes will affect his eligibility for coverage. Based on the information provided, what should Mr. Thompson do to enhance his chances of securing a long-term care insurance policy? A. Apply for coverage immediately without disclosing his diabetes condition. B. Wait until he is 65 to apply, as age may improve his eligibility chances. C. Consult with a long-term care insurance agent to discuss his medical history and receive tailored advice. D. Seek coverage through his health insurance plan as it will cover his long-term care needs. Answer: C. Consult with a long-term care insurance agent to discuss his medical history and receive tailored advice. Explanation: consulting with a long-term care insurance agent allows Mr. Thompson to understand how his medical condition, particularly his early-stage diabetes, may impact his eligibility for coverage. Agents can provide personalized advice on potential options available to him considering both his age and health status. They can help him navigate underwriting requirements and recommend policies that may be more accommodating for applicants with pre-existing conditions. Option A is incorrect because failing to disclose his diabetes could lead to policy cancellation or denial of claims later. Option B is not advisable since waiting to apply does not guarantee improved eligibility and could result in higher premiums due to age. Option D is misleading as most standard health insurance plans do not provide comprehensive coverage for long-term care services, highlighting the need for specific long-term care insurance policies. Question 4. Financial considerations. Which of the following factors is most likely to affect the premiums of a long-term care insurance policy? A. The applicant's marital status. B. The chosen benefit period and daily benefit amount. C. The location of the insurance company's headquarters. D. The applicant's primary care physician. Answer: B. The chosen benefit period and daily benefit amount. Explanation: the premiums for long-term care insurance policies are primarily influenced by the chosen benefit period, the duration benefits will be paid, and the daily benefit amount, the maximum amount the policy will pay per day for care. A longer benefit period and the higher daily benefit amount will result in higher premiums, reflecting the increased potential liability for the insurer. Option A. Marital status may have some impact due to joint policies or discounts but is not the primary factor. Option C. The location of the insurance company's headquarters is irrelevant to individual premium costs. Option D. The applicant's primary care physician does not affect the policy premiums. Question 5. Consumer protections. Under Washington state law, which of the following statements regarding the Long-Term Care Partnership Program is true? A. It eliminates the need for a medical assessment before policy issuance. B. It allows for asset protection equal to the amount of benefits received from the policy. C. It mandates that all long-term care insurance policies must include a return of premium rider. D. It requires that policies be renewable only until the policyholder turns 70. Answer B. It allows for asset protection equal to the amount of benefits received from the policy. Explanation. The Long-Term Care Partnership Program in Washington state is designed to promote the purchase of long-term care insurance by allowing policyholders to protect their assets. If a policyholder exhausts their LTCI benefits, they can retain assets equal to the amount of benefits received from the insurance policy, thus encouraging individuals to buy coverage while providing a safety net. Option A is incorrect because a medical assessment is often required during underwriting. Option C is false and not all policies must include a return of premium rider. Option D is misleading as policies can often be renewable beyond age 70 depending on the terms of the policy. Question 6. Policy features. Which of the following features in a long-term care insurance policy specifically addresses the risk of rising healthcare costs over time? A. Daily benefit amount. B. Elimination period. C. Inflation protection. D. Non-forfeiture option. Answer C. Inflation protection. Explanation. Inflation protection is a crucial feature in long-term care insurance policies that ensures the benefit amounts increase over time to keep pace with inflation. This is particularly important as healthcare costs tend to rise and inflation can significantly erode the purchasing power of fixed benefits. Option A. Daily benefit amount is the initial amount the policy will pay for care but does not account for inflation. Option B. Elimination period refers to the time before benefits begin and does not address rising costs. Option D. Non-forfeiture option provides some benefits if the policy is cancelled but is not related to inflation adjustments. Question 7. Eligibility criteria. Which of the following conditions would most likely result in a long-term care insurance application being denied? A. A diagnosis of hypertension managed with medication. B. A history of treatment for depression resolved over 5 years ago. C. A recent diagnosis of Alzheimer's disease. D. A previous knee surgery with no ongoing complications. Answer C. A recent diagnosis of Alzheimer's disease. Explanation. A recent diagnosis of Alzheimer's disease would likely lead to a denial of a long-term care insurance application due to the high level of care typically required for individuals with this condition. Insurers generally view cognitive impairments as significant risks which affects their willingness to provide coverage. Option A. Hypertension is common and often considered manageable, typically not a reason for denial. Option B. A resolved history of depression may be reviewed but usually will not result in automatic denial if there are no current issues. Option D. A previous knee surgery, especially with no complications, is also unlikely to affect eligibility negatively. Question 8. Types of long-term care services. Which type of long-term care service is characterized by support provided in the individual's own home rather than in an institutional setting? A. Skilled nursing facility care. B. Adult daycare. C. Home health care. D. Assisted living. Answer C. Home health care. Explanation. Home health care refers to a range of medical and non-medical services provided in a person's home, allowing individuals to receive care in a familiar environment while maintaining their independence. This may include nursing care, physical therapy, or assistance with daily activities. Option A. Skilled nursing facility care involves institutional care which is not provided in the home. Option B. Adult daycare offers structured care during the day but requires the individual to return home in the evening, also not a home-based service. Option D. Assisted living provides residential care in a facility rather than in the individual's home. Question 9. Ethical considerations. In the context of selling long-term care insurance, which of the following actions would be considered unethical for an insurance agent? A. Providing clients with comprehensive information about policy options. B. Pressuring a client to purchase a policy that exceeds their financial capacity. C. Discussing the importance of long-term care insurance in retirement planning. D. Assisting a client in comparing multiple policies. Answer: B. Pressuring a client to purchase a policy that exceeds their financial capacity. Explanation: pressuring a client to purchase a policy that exceeds their financial capacity is considered unethical as it violates the principles of responsible selling and may lead to financial hardship for the client. Agents have a fiduciary responsibility to act in the best interests of their clients, which includes ensuring that the products sold are affordable and suitable for their needs. Option A is ethical as providing comprehensive information is part of the agent's responsibility. Option C reflects ethical practice in educating clients about financial planning needs. Option D is also ethical as assisting in comparisons helps clients make informed decisions. Question 10. Claims process challenges. What should a long-term care insurance policyholder do if their claim for benefits is denied due to a lack of documentation? A. Accept the denial and discontinue further claims. B. Wait for the insurer to contact them regarding additional documentation. C. Gather the required documentation and appeal the denial. D. Seek legal action immediately against the insurer. Answer: C. Gather the required documentation and appeal the denial. Explanation: if a claim is denied due to lack of documentation, the appropriate course of action is to gather the required documentation and formally appeal the denial. The appeals process allows policyholders to present additional information and clarify misunderstandings that led to the denial. Option A is not advisable as policyholders have the right to appeal and seek benefits. Option B is incorrect because waiting for the insurer to contact them may delay the resolution of their claim. Option D, seeking legal action immediately, is premature and typically unnecessary at this stage as there are internal appeal processes that should be exhausted first. Question 11. Institutional care versus home care. Which of the following scenarios best illustrates the concept of institutional care in long-term care insurance? A. Mrs. Lee receives help with daily activities from a home health aide while living in her apartment. B. Mr. Garcia attends a day program for seniors that provides meals and social activities. C. Ms. Thompson resides in a skilled nursing facility where she receives around-the-clock medical care. D. Mr. Patel has a family member assist him with bathing and dressing in his home. Answer: C. Ms. Thompson resides in a skilled nursing facility where she receives around-the-clock medical care. Explanation: institutional care refers to services provided in a facility setting, such as a skilled nursing facility (SNF), where individuals receive comprehensive medical care and assistance with daily living activities. In this case, Ms. Thompson's residence in a skilled nursing facility exemplifies institutional care due to the 24/7 availability of medical professionals. Option A refers to home care, where assistance is provided in the individual's own home. Option B describes adult day care, which is also not considered institutional care as it does not involve overnight stays. Option D represents informal caregiving in the home, not institutional care. Question 12. Understanding exclusions. Which of the following is typically an exclusion in long-term care insurance policies? A. Care received in a skilled nursing facility. B. Care provided due to an injury from an accident. C. Care for intentionally self-inflicted injuries. D. Care received at home for daily living assistance. Answer: C. Care for intentionally self-inflicted injuries. Explanation: long-term care insurance policies often include exclusions for intentionally self-inflicted injuries, as insurers do not cover care related to actions taken by the insured that could have been avoided. This exclusion is intended to mitigate moral hazard, ensuring that the insurance is used for genuine long-term care needs. Options A and B generally involve covered services, and option D also typically falls within the realm of covered home health care services, assuming all other conditions of the policy are met. Question 13. Enrollment periods. During which period are individuals typically allowed to enroll in a long-term care insurance policy without undergoing medical underwriting? A. Open enrollment period. B. Initial enrollment period. C. Special enrollment period. D. Annual renewal period. Answer A. Open enrollment period. Explanation: an open enrollment period allows individuals to apply for long-term care insurance without undergoing medical underwriting, making it easier for those with pre-existing conditions to secure coverage. During this time, insurers cannot deny coverage based on health status. The initial enrollment period refers to the first opportunity to enroll, but may involve medical underwriting. A special enrollment period can occur under certain circumstances, but typically also involves scrutiny of health status. The annual renewal period does not provide an opportunity for new enrollments without underwriting. Question 14. Premium payment options. Which of the following premium payment options typically results in the lowest overall cost for long-term care insurance? A. Monthly payments. B. Annual payments. C. Semi-annual payments. D. One-time lump sum payment. Answer: D. One-time lump sum payment. Explanation: a one-time lump sum payment generally results in the lowest overall cost for long-term care insurance because it avoids any interest charges or administrative fees that might accumulate with periodic payments. Insurers often offer discounts for policyholders who pay the full premium upfront. Options A, B, and C involve periodic payments, which typically include additional costs due to the financing aspect of spreading payments over time. Question 15. Claims process documentation. In the claims process for long-term care insurance, which document is essential for substantiating the level of care provided? A. Application for benefits. B. Policyholder's medical history. C. Care plan developed by a healthcare professional. D. Premium payment history. Answer: C. Care plan developed by a healthcare professional. Explanation: a care plan created by a healthcare professional is critical in substantiating the level of care provided, detailing the types of services and frequency of care required. This documentation helps validate the claim and ensures that the care being provided meets the policy's criteria. Options A and B are not typically required for the claims process, and option D pertains to payment history rather than care provision. Question 16. Regulatory framework. What is the primary purpose of the National Association of Insurance Commissioners (NAIC) model regulations for long-term care insurance? A. To set minimum benefit levels for all long-term care insurance policies. B. To ensure uniformity and consumer protections across state lines. C. To determine the eligibility criteria for long-term care insurance applicants. D. To enforce premium rate controls for long-term care insurance products. Answer: B. To ensure uniformity and consumer protections across state lines. Explanation: the primary purpose of the NAIC model regulations is to promote uniformity and consumer protections in the long-term care insurance market across different states. These model regulations provide a framework that states can adopt, ensuring that consumers are adequately protected and insurers are held to consistent standards. Option A is incorrect because the NAIC does not set minimum benefit levels, it offers guidelines. Option C relates to underwriting processes, but is not the main focus of NAIC regulations. Option D pertains to premium controls, which are typically managed at the state level rather than through NAIC mandates. Question 17. Critical thinking in policy evaluation. When evaluating long-term care insurance options, which of the following factors should a policyholder prioritize to ensure adequate coverage? A. The insurer's financial rating and claims paying ability. B. The presence of a non-forfeiture option. C. The historical performance of the insurer's stock price. D. The policy's marketing materials and promotional offers. Answer: A. The insurer's financial rating and claims paying ability. Explanation: when selecting a long-term care insurance policy, it is crucial to prioritize the insurer's financial rating and claims paying ability to ensure they will be able to fulfill claims obligations in the future. A strong financial rating from independent rating agencies indicates stability and reliability, while a non-forfeiture option B is important. It is secondary to ensuring the insurer can pay claims. Option C, the insurer's stock price performance, is less relevant to policyholders than financial stability. Option D, marketing materials, can be misleading as they may not provide accurate assessments of coverage quality or insurer reliability. Question 18. Innovations in long-term care. Which of the following innovations in long-term care insurance is designed to meet the needs of a changing demographic landscape? A. Increased use of telehealth services for care management. B. Mandatory participation in government-sponsored LTC programs. C. Standardized benefit amounts across all policies. D. Fixed-term policies with limited renewability. Answer A. Increased use of telehealth services for care management. Explanation: the increased use of telehealth services is a significant innovation in long-term care insurance, allowing policyholders to access care management remotely, which is particularly beneficial for aging populations or those with mobility issues. Telehealth services help to enhance the efficiency and accessibility of care. Options B and D reflect regulatory or policy restrictions rather than innovations. Option C. Standardization of benefit amounts is contrary to the individualized nature of insurance needs and does not address demographic changes. Question 19. Policy exclusions and limitations. Which of the following statements regarding long-term care insurance exclusions is correct? A. All long-term care insurance policies must include at least one exclusion. B. Exclusions typically apply only to care received in a nursing facility. C. Policyholders have the right to contest exclusions during the application process. D. Exclusions may include care resulting from acts of war or terrorism. Answer: D. Exclusions may include care resulting from acts of war or terrorism. Explanation: many long-term care insurance policies include exclusions for care resulting from acts of war or terrorism, reflecting the high risk and unpredictability associated with these situations. Insurers typically exclude these risks to manage liability effectively. Option A is incorrect. While many policies have exclusions, there is no requirement for them to include one. Option B is misleading. Exclusions are not limited to nursing facility care and can apply across various types of care. Option C is not accurate. Policyholders usually do not contest exclusions during the application process, but they can seek clarification. Question 20. Consumer education and counseling. What is the most effective strategy for an insurance agent when educating clients about long-term care insurance options? A. Provide a one-size-fits-all policy recommendation based on client age. B. Utilize detailed case studies that reflect diverse client needs and preferences. C. Focus solely on premium costs to highlight affordability. D. Emphasize complex legal terminology to demonstrate expertise. Answer: B. Utilize detailed case studies that reflect diverse client needs and preferences. Explanation: utilizing detailed case studies that reflect diverse client needs is the most effective strategy for educating clients about long-term care insurance. This approach helps clients understand how different policies can be tailored to meet their specific circumstances and preferences, fostering a deeper comprehension of their options. Question 21. Underwriting considerations. In the underwriting process for long-term care insurance, which of the following factors is most likely to lead to a policy application being declined? A history of heart disease in the applicant's family. B. A diagnosis of a chronic illness requiring ongoing care. C. A request for coverage at an older age. D. A recent hospitalization for a minor procedure. Answer: B. A diagnosis of a chronic illness requiring ongoing care. Explanation: underwriting evaluates an applicant's health status, and a diagnosis of a chronic illness requiring ongoing care is a significant risk factor that can lead to a policy application being declined. Insurers are particularly cautious about conditions that indicate a high likelihood of requiring long-term care services. Option A may raise concerns, but family history alone is less influential than the applicant's current health status. Option C can lead to higher premiums rather than outright declines. Option D, a recent hospitalization for a minor procedure, typically would not be a disqualifying factor unless it indicates a more serious underlying condition. Question 22. Benefit periods. Which of the following statements best describes the concept of a benefit period in long-term care insurance? A. It refers to the total amount of benefits paid out over the life of the policy. B. It is the time frame during which an insured can receive benefits after a claim is approved. C. It represents the maximum length of time that benefits will be available for a specific claim. D. It determines the period during which premiums must be paid for coverage to remain active. Answer: C. It represents the maximum length of time that benefits will be available for a specific claim. Explanation: the benefit period in long-term care insurance specifies the maximum duration for which benefits can be received for a given claim. This period can vary significantly based on the policy and can range from a few years to a lifetime. Option A misrepresents the benefit period as an aggregate amount rather than a duration. Option B incorrectly suggests it starts post-approval of a claim. Option D relates to premium payment schedules, not the benefit duration. Question 23. Inflation protection. Which of the following options B, ST describes the purpose of inflation protection in long-term care insurance policies? A. To ensure that the premiums remain stable over time. B. To increase the benefit amount to keep pace with rising costs of care. C. To guarantee coverage for pre-existing conditions after a waiting period. D. To provide additional benefits for rehabilitation services. Answer: B. To increase the benefit amount to keep pace with rising costs of care. Explanation: inflation protection is designed to ensure that the benefits of a long-term care insurance policy increase over time, helping to cover the rising costs of long-term care services. This feature is crucial for maintaining the policy's value, especially as healthcare costs can escalate significantly over the years. Option A addresses premium stability, which is not the focus of inflation protection. Option C pertains to underwriting and eligibility, and option D is unrelated to inflation but instead addresses specific services. Question 24. Long-Term Care Partnership Program. What is the primary benefit of the Long-Term Care Partnership Program in Washington State? A. It reduces premiums for low-income individuals. B. It allows individuals to qualify for Medicaid while retaining some assets. C. It mandates that all insurers offer coverage for pre-existing conditions. D. It provides tax deductions for premium payments. Answer: B. It allows individuals to qualify for Medicaid while retaining some assets. Explanation: the Long-Term Care Partnership Program enables individuals who purchase qualifying long-term care insurance policies to protect a certain amount of their assets when applying for Medicaid. This program encourages the purchase of private insurance while providing a safety net for individuals needing assistance. Option A is incorrect. The program does not specifically target premium reductions for low-income individuals. Option C is misleading, as eligibility requirements for pre-existing conditions vary. Option D is not an aspect of the partnership program. Question 25. Claims process. Which of the following steps is typically not part of the claims process in long-term care insurance? A. Submitting a claim form with required documentation. B. Undergoing a medical examination by the insurer. C. Providing a care plan from a healthcare provider. D. Review of the claim by the insurer's claims department. Answer: B. Undergoing a medical examination by the insurer. Explanation: in the claims process for long-term care insurance, applicants generally do not undergo a medical examination after a claim is filed. Instead, the claims process involves submitting relevant documentation and a care plan from healthcare providers. The insurer's claims department will then review the submitted information to make a determination. Option A, C, and D are all standard procedures in the claims process, ensuring that the insurer has sufficient information to assess the claim. Question 26. Ethical considerations in sales. Which of the following practices would likely be considered unethical for an agent selling long-term care insurance? A. Recommending policies based on the client's specific financial situation. B. Overstating the benefits of a policy to secure a sale. C. Disclosing all policy exclusions during the sales process. D. Comparing multiple policies to find the best fit for the client. Answer: B. Overstating the benefits of a policy to secure a sale. Explanation: overstating the benefits of a policy is considered unethical as it misleads clients and can lead to dissatisfaction and financial harm when the policy does not deliver as promised. Agents are responsible for providing accurate and honest representations of the policies they sell. Options A, C, and D reflect ethical practices that align with the duty to serve the client's best interests, ensuring they receive appropriate recommendations based on their unique situations. Question 27. Financial considerations. Which of the following is a common financial consideration when purchasing long-term care insurance? A. Coverage for services not covered by health insurance. B. The impact of insurance on future Social Security benefits. C. The potential for premium increases over time. D. The possibility of selling the policy for cash value. Answer: C. The potential for premium increases over time. Explanation: one of the key financial considerations in long-term care insurance is the potential for premium increases as the insurer adjusts rates based on claims experience and other factors. Policyholders should evaluate the insurer's history regarding premium stability before purchase. Option A is an important feature but does not directly pertain to financial considerations. Option B is misleading. A long-term care insurance does not directly impact Social Security benefits. Option D generally does not apply to traditional long-term care insurance policies, which do not accumulate cash value. Question 28. Practical applications in long-term care planning. Mr. Johnson is 75 years old and has a long-term care insurance policy with a daily benefit amount of $150. He is considering using his policy for in-home care. If the home care agency charges $200 per day, what is the financial impact on Mr. Johnson's total care costs? A. Mr. Johnson pays $50 out of pocket daily. B. Mr. Johnson pays $100 out of pocket daily. C. Mr. Johnson is fully covered with no out-of-pocket expenses. D. Mr. Johnson's policy covers the full cost of care after 30 days. Answer A. Mr. Johnson pays $50 out of pocket daily. Explanation. Mr. Johnson has a daily benefit amount of $150, but the home care agency charges $200 per day. The calculation is as follows. Out-of-pocket cost equals daily charge. Daily benefit amount. Out-of-pocket cost equals $200. 150 equals $50. Thus, Mr. Johnson will need to pay $50 daily out of pocket for his in-home care services. Question 29. Consumer protections. What is the primary purpose of consumer protections in long-term care insurance as mandated by Washington state regulations? A. To limit the number of policies an individual can purchase. B. To ensure clear communication of policy benefits and limitations. C. To standardize premiums across all insurers. D. To mandate coverage for all applicants regardless of health status. Answer. B. To ensure clear communication of policy benefits and limitations. Explanation. Consumer protections in long-term care insurance aim to ensure that policy benefits and limitations are clearly communicated to prospective policyholders, helping them make informed decisions. This transparency is crucial in helping consumers understand their coverage options and any potential exclusions. Options A and D do not align with consumer protection goals as they impose restrictions that could hinder access to coverage. Option C is inaccurate as premium rates can vary widely based on individual risk factors and insurer practices. Question 30. Current trends in long-term care insurance. Which of the following trends is currently shaping the long-term care insurance market? A. Increased demand for traditional nursing home care over in-home care. B. Rising popularity of hybrid policies combining life insurance and long-term care benefits. C. Decrease in awareness and education about long-term care options. D. Stricter regulations that limit the availability of long-term care insurance products. Answer. B. Rising popularity of hybrid policies combining life insurance and long-term care benefits. Explanation. One of the significant trends in the long-term care insurance market is the rising popularity of hybrid policies that combine both life insurance and long-term care benefits. These hybrid policies offer consumers more flexibility as they provide a death benefit if the long-term care benefits are not used, addressing concerns about paying premiums for benefits they may never need. Option A is incorrect because there is generally an increased preference for in-home care over traditional nursing home care. Option C is also inaccurate as awareness and education about long-term care options are growing. Option D is not the case. While regulations exist to protect consumers, they do not necessarily limit the availability of insurance products.